Good morning to all traders. It is our oil and gold day today. We're going to start with oil, then move to the gold. Oil has been moving up. It has been a very good session, despite the fact that API reported a surprise build, I would say. There were comments from Iran's oil minister that suggested that OPEC might agree to deeper production cuts. At the same time, there is oversupply worries, and they seem to be offset, to be honest, by expectations that a trade deal is going, phase one of a trade deal is going pretty well. And that is actually why gold was moving lower. It was moving lower because China is now asking us phase one of this agreement for the US to roll back the additional tariffs that they imposed back in September. So the markets are a bit mixed. There is a lot of geopolitical events that affect oil and gold to the upside, the downside. At this moment, oil and gold move opposite to one another, which means we have risk into the markets coming through the oil inflows, and also if not mistaken, dollar is also moving up. We've had some good ISM non-manufacturing data yesterday, and that seemed to be optimistic, of course, for the US economy, along with last week's NFP. So on gold, I keep my view as before. Still expecting this to move lower, and we have done waves 1 and 2 in the minor perspective, and we're waiting for wave 3. Okay. Now, within this wave 3, we had waves 1, 2, and 3 completed. And although I was expecting the prices to start moving lower from here, we had another retrace, okay, a bounce, a retest on the lower trend line of this channel, and we went up for a complex combination here, a triple zigzag that is looking like it's ended and below wave 1. And that makes that continuation down to wave 5 impulsive. Now, there is a small signal both on the RSI and MACD that they support a tiny bit oil bears. So for that reason, I would be a little bit pretty much after this ABC, right? So we want to see lower lows consistently, and then a good break of this trend line, potentially, or even better, with a retest right at that level. From there, we should be looking at prices to move below the 51 level, and perhaps even lower to complete the last wave, minor 3, then minor 4, and then minor 5. Now on gold, gold is a little complicated as well. Obviously, we are still in a corrective mode, right? We had this wave up here that ended, and now we're expecting wave 4 to complete. The question that many ask, is it completed? Did we see that ending right here or not? Well, in my opinion, and since I see this as a complex pattern, that this is a zigzag, this looks like a flat, and now we're looking to move down to complete wave Y. That will also be minor wave 4. And I say this because we don't have any biases coming through from both MACD and RSI, which means that when they continue or they are heading into the same direction without divergences, we're most likely looking at continuing with the current trend, which at the moment is bearish. Now, I see this wave X ending up here because we have this retracement, this correction down there. We had an A triangle B, okay, and an impulsive C. This is a flat pattern that ended, and now we're looking potentially at this being wave 1, wave 2, then we're going for wave 3, wave 4, and wave 5, potentially, right? That could, of course, turn out not to be the case. We could have a bounce. We could see prices now moved up here, right? We can see prices like staying within a range here. I mean, even going for another flat pattern, right? before we get further clues. Now, the thing is, because we were expecting this to be an ABC, and then we're expecting to see another ABC, potentially double zigzag, for prices to move above that level, because we ideally would want to see this move being replicated. So from 1459.60 to 1520, that's $60. So we would expect prices to move from 1480 to around 1440, to be honest, right? So this will be the ideal scenario to support the tendency of zigzag waves being pretty much equal, right? But if we don't get that, it means that we have a truncated wave over here, right? And that's why we're most likely going to move to the downside. So we can expect in the short term to see whether prices, the current actually prices, because we're very close to the previous low, are going to indeed break below that level. And then we want a break below this level, and then of course a break below this level. So the potential here, and since we stopped above the 90% of this retracement, right, we want to see now prices ideally going to 14,454 and maximum the 1 to 3 extension around 1440, which is a very good round number as well. Okay, so this is all for the day.